Hi everyone, good morning from Nami Island here in South Korea, where we continue to make videos on the basics of stock trading and investing with the goal and the heart to help you reach your goals of financial freedom. So now I'm gonna try to answer a couple of questions that have been sent via my website marvingurmo.com. So there were a couple of questions asking about how I plot my support and resistance, or how do I know if that support and resistance is relatively strong, or how can you plot and know if that area of support is something that's strong. You have to remember this though, when it comes to technical analysis, it's not just a science or a mathematical model on how you plot. No, it's also an art in a sense that it also shows more about who you are as a person. It shows your risk tolerances, your time frame, your timeline, and the gains that you're willing to make. So what does that mean? The way I would draw it would be different from the way you would draw it, because you already have preconceived biases on how you plot your timelines as well, and the risk and the object of entry on where you want to come in and out of a stock. So how do you plot it? Just look at it from a concept of market psychology. What do I mean by this? Of course, a support is an area where there's a lot of buying that's happening. A support is an area where there's more buyers than sellers. So try to find a portion in the history of the chart that you are looking at, where as the stock starts to drop down, it forms some sort of a support range. When a stock starts to go down, it forms some sort of area where the stock cease to go down anymore. Why does it cease to go down? Because there are people who have started to buy the stock. You have to remember, when it comes to stock trading, more buyers bring the prices up. So it hits a level of support when the stock goes down, but because there's a level of buying there, buyers, investors prevent the stock from going down as well. So please remember this: buyers want to buy low, sellers want to sell high. So the fact that it does not fall anymore, it means that buyers are okay with that price already, and they're willing, and they believe that price is relatively cheap already. So when people think it's cheap, the stock or whatever market you're trying to analyze will fail to go down already. So look for that historical area, look for that area in the past portions of the chart where the stock fails to go down. Then look for another point, another area in the chart where the stock does not go down anymore. So what do I mean by this? One area plotted to another area where the stock does not go down, plot them together, connect those points together, and it will form a line. That line can be your support level. So how does this work? The more touches it has when you start drawing a line, when the stock goes down, up, down, up, down, up, when it goes down and it touches a certain point, touches a certain line, and it fails to go down anymore, plot those two together, plot those lines together, and that will be your support. The more touches it has, the stronger the support is. The more touches it has historically, the greater the ability of that stock to actually bounce from it, and the longer the support line is, if that support line hasn't dropped that range for years already, the stronger and the larger the sense or the semblance that you have that it will actually bounce. So please remember this: the longer the time frame, the stronger the support is. The shorter the time frame, the weaker the support is. So that's how you can gauge your trades as well. The longer you plot it, the stronger it would be. The shorter you plot it, the weaker it would be. So what does that mean as well? There's a bigger chance that it may break down if the support is weak. If the support is weaker, the time frame is weaker, but there's a bigger chance that it will just bounce if you have a longer time frame for that support range. So please remember this also: a support is not just a specific price point, it's a specific range. So it's not just, say, 10 pesos, it's probably 9.9, 9.8, 10, 10.1, 10.2, because it's a specific range. Those who use support and resistance in their trades are what you call people who do range trading. That's why it's not a specific price, but it's a specific range where you could possibly go through it and go through your trades as well. So that's it. Look for areas in the past, connect those areas where the market or the stock does not go down, plot those points together, it forms a line. Areas where it does not go down, it forms a strong support. As it forms a strong support, that's where you start buying. Alright, so that's it. Those, I just really buy close to the support, and that's what I do over and over and over and over and over and over and over again. It may be moving averages, it may be Fibonacci, but all of those things are just based on support and resistance. So plot your supports well. Look for areas where there's a strong support. Look for areas where the market does not drop anymore. Plot those lines together, and that's your support area. That's your support line. I hope this video helps you trade well, trade strong, trade smart. More videos from South Korea. I hope this helps you. God bless you all.